and wholesale revenue. Let's see. Wholesale traffic growth has been huge in the last couple of years, at around 20% growth. However, the wholesale market, the revenues have been growing more slowly, about 6% in 2006. And by looking at the slide, you see what one of the reasons may be is that 2/3 of the traffic that's wholesale is terminated to mobile, and particularly in Europe, where mobile, the cost of terminating mobiles is dropping, or has been dropping over the last couple of years. So we're seeing that in wholesale revenues. Okay, key drivers. No. So, okay, first, let me also tell you about telegeography. The way we collect the traffic data, a lot of it is based on data we also get from regulators. And most of the information, well, a very important part of the information we get is released in October of the following year. So we'll have the complete 2007 data in October. So that's why you'll see a lot of this data is 2006. We have some data that we can make some estimates for 2007 that you'll see up here as well. But that'll be the next report that comes out in November. Okay, key drivers to traffic growth. First of all, the two macro level factors, international trade and international migration, of course, are still going strong. And of course, when you look at the largest routes reflect the international migration, of course, for voice traffic. If you look at UAE, the largest routes out of UAE are to Pakistan and Philippines, and of course, as we saw, U.S. to Mexico. Huge routes, that's the largest international route is U.S.-Mexico. And these are going strong. However, price reductions and mobile growth, not as much. Price reductions, of course, as pricing is of course stimulates demand for traffic, we saw that price reductions had a lot of effect on traffic in late 90s and early 2000s. Tremendous. And now, since prices are getting so low, of course, already cutting prices, you don't see as much of a stimulation of demand for price cuts anymore. And for mobiles, mobile subscription is still growing very, very strong. In 2006, I believe, it was 20% as well. But growth in mobile traffic has been falling off just a little bit. And one reason we've seen is because the type of subscribers have changed. If we look in Western Europe, where mobile phones outnumber people, most of the new accounts are second or third accounts and not the first accounts. So we find in general that they generate lower volumes of traffic. And also in mobiles, the locus of growth has moved to developing countries. The fastest growing markets have been China, India, Pakistan, and Nigeria. And mobiles have had a huge effect. Mobile traffic's had a huge effect on the call volumes in these countries. But the volume per line is still lower than the early adopters. Still lower than the early adopters or cord cutters that we saw in Europe, Western Europe, Singapore, and Hong Kong. Another factor is Skype. Skype's impact on international long distance. Like I was saying earlier, when we track traffic, we track the billable minutes because we can get that traffic data. The PC to PC traffic, for most part, since it's not billed, it's not tracked in the same way. It's harder for us to get that data. So we of course focused on the traditional traffic. And in 2007, Skype PC to PC traffic, not the Skype out traffic, which is terminated on traditional networks, but the Skype PC to PC traffic, we estimate was 43 billion minutes in 2007. And about half of that is international, so about 21 billion minutes. And if we add the 21 or 22 billion minutes to the traditional traffic base, it comes out that Skype traffic is about 6% of total traffic. This number is small relative to the traditional traffic base, but definitely enough to affect growth rates. And if you took the 21 or 22 billion minutes of international of Skype traffic and added it to the traditional traffic growth, you would bump the growth rate back up into the historic range of about 15 to 17%. So Skype isn't going to replace PSTN anytime soon, but carriers that depend on strong traffic growth to offset falling prices, Skype volumes are sufficient to have a real impact on revenues. Okay, shifting focus a bit. This looking more at the retail side. In the U.S., the IP-originated voice services are growing very fast. And in the first quarter of 2008, there were a total of 16.2 million lines. And as you can see, Comcast is leading the market. And in the first quarter of 2008, they added over 700,000 VoIP lines, which is huge. Vonage, on the other hand, added under 30,000 lines in the same quarter. If you compare this to a year ago, Vonage added, I think, 170,000 lines. So Vonage is slowing down, possibly a spent force. But cable MSOs serve 80% of the VoIP subscribers in the U.S. And then, of course, the other 20% are Vonage or ESP providers. And the cable companies have been very successful at marketing VoIP as a part of their bundle. 75% of cable VoIP subscribers are part of triple plays. Yes?
The fact that there is no information about the horizon,
Uh-huh.
because most of their bundles are still, for the voice part, remain still on PSTN, or?
Yes, well, Fios is PSTN over fiber. It's not voice over IP. They do have VoiceWing, but that's a separate service. So, and we know that the numbers for Fios, or not for Fios, but for the VoiceWing are relatively low, just like with AT&T's CallVantage, etc., compared to the cable companies, etc. So, in this chart, since it is VoIP, we don't include Fios.
Are these?
Sorry.
Are these generating a lot of international?
Excuse me?
Traffic?
Are these generating a lot of international traffic?
Yeah, in particular the cable operators.
They're generating international traffic, but very often, although you have the packages where you can, or the bundles where you have unlimited national calling, international is still comparable to non-VoIP offerings in many cases.
Two of them that last year were offering $20 unlimited to 150 country packages.
Yeah.
Was it successful?
Yeah. We're not seeing it. Well, we can't. We don't know because on the international carrier side, okay, we have that data, but we can't get from. We don't have that information.